Hey folks, Dan Frio here with your closing bell for April 16th, 2025. So mortgage rates continue to drop. Well, so did the stock market. We had the equity markets basically all the way across the board. They were down. Some good news, mortgage rates or the mortgage bonds were up, bringing rates down. And we had Federal Chairman Powell speaking in front of a committee today saying, we don't know what we're going to do. And that's representative right through here with the Fed Watch tool. So these are all the things we're going to talk about in today's video because you guys need to understand what's going on with these things and the whys behind it. Because I'm a mortgage loan officer and I want you guys to understand the real estate market. But we have that's our focus. But we also want to teach you guys what all this data is, the Dow Jones and everything else has and plays a role in mortgage rates and products. So without further ado, let's get to why rates dropped today. So you go over to this, and I think there's another flee to safety once again. So what that means is for the new people on board, what happens is when you start seeing a huge sell-off in the market like this, most cases, these people are putting their money somewhere. They're putting it to work in some kind of instrument. Those instruments are usually bonds. So when you come over to the bond market, they usually get a pickup, and we saw that right through here. So we had a pickup in the mortgage bond market right now. And so this is what's happening. Let's look at just today's chart. This is what happened today. So what you're going to see is there's an inverse relationship with this chart and what's going on with mortgage rates, okay? So what I mean by that is this chart goes up. This is the price of a bond, the mortgage bond. As it goes up, the yield or the interest rate comes down. And you can see right through here, all these orange bubbles, these indicate to me or trigger to me that these lenders, and these are a lot of lenders that we're set up with nationwide, are actually changing their rates. And these will trigger if they're changing rates to the good or the worse. So that's what we'll see throughout the day. And this is how I trigger and I focus in on what's going on with rates. And that's why we can help you guys if you're out there as a homeowner trying to track rates. Well, put that in our lap and I can have a tool, and I'll show you at the end of this video, that can help you do just that. So this is what's going on in the markets right through here. So we'd like this rally. Look at the 2-day rally that we see. So again, as this chart goes up, rates are coming down. Here's bad news. Well, I'm going to say bad news for people down through here. If you locked in right around April 10th, 11th, 12th, please give me a call or visit our website, and I'm going to tell you why. Look at this rally. This rally right through here is 130 points. That means, some interest rates in some products probably went down 0.5%. So could you qualify for something better? I'll give you all my information at the end. Federal Chairman Powell came in today and said, well, between tariffs, the uncertainty of all the tariffs, and it's the same reason why the stock market's going all over the board, that we're not going to do anything. And that's representative right through here. The CME Fed Watch tool, you can get this. I think it's down below in the description, but just go Google CME Fed Group, cmegroup.com. It's going to pop up and it's going to say, well, in 20 days, the Federal Reserve is going to be meeting. What are they going to do? If you go down through here, it's going to tell you the probability. There's an 83% probability. Let's go through here. They're not going to do a thing. And that shows you right through there. So right above my head, you're going to see the chart right across here. This is actually the federal funds rate. Right now, it's 4.25 to 4.5. Over through here, you're going to see the dates. So you're going to see at the May meeting that's coming up soon, they're not going to do anything. 82% chance they're not going to do anything unless just the wheels fall off somewhere, somehow. And it's sure not going to be coming from the economic news coming out soon. So now that brings us over to, are we getting the wool pulled over our eyes? And here's what I mean by some of these. All the analysts, if you look at them 30 days ago, the world couldn't have been better. They were piling into the stock market. All of a sudden, it's like 90% of them turned. Are they waiting for us, the average consumer, to freak out, get out? They're watching it come down, and then they're going to pounce on. Let me give you some details of what I have. If you look at the economics of the country right now, it's not looking so bad. Everything pivots around tariffs. So let's just go in and look at this week. Here's the earnings calendar on financials and a whole ball of wax. I'm going to get my head out of the equation real quick. And I know this is data that's already in. This is first quarter and the tariffs haven't hit in or anything. But just because of the tariffs, is the world going to change or the U.S. stock market going to change that much? Are we still not, the number one place to invest? We have the most security in our investments environment and so forth. But let's get over to some of these. And I don't know. I went through a couple of these. Here's the earnings right through here, how they came in. Did they beat? Did they, not beat? Just going to go through this week's. So we're going to start with Goldman Sachs. They're an investment company, and let's see what they did. They beat by 1 point on revenue, by 1.7 and by earnings per share by 14%. I just want to see if these are green or red. And then what I want to see is, hey, did any of them just completely beat it? But let's just see if they're green or red. The majority of them. Okay, that one was green. Oh, this one's red. Revenue was down in that category right through there. But we also had an earnings per share beat and dramatically beat. Johnson & Johnson, green, beat. Citibank, beat. Sorry, I missed Bank of America. Beat. PNC. Oh, missed a little bit here, but beat on the bottom line. I don't even know who this is here. Beat 2.5 there. My whole point is this, and let's see if Netflix came out yet. It's after the close. Yeah, they killed it like they thought they were going to do. So this is one stock I wish I would have got into when it first was created. My goodness, would have made some money there, but that's water under the bridge. So what my point is, we had jobs reports that just came out, and the jobs are fantastic right now. Could it turn on a dime? Absolutely. Will it? I think we're going to see a gradual, descent there. Maybe. Don't know how tariffs are going to go. You also see the inflation numbers. We had producer inflation numbers came out last week, dramatically better than even expected, and way better than where they were. Same thing with the CPI, consumer inflation. So we still have GDP upticking. So maybe not as robust as it was. But, things might just come down to normal. So when we look at the markets right now, mostly earnings beats. The companies seem to be doing okay. We have the consumer right now still, you look at the consumer disposable income, it's still on an upward trajectory for middle and upper class, lower class getting hammered. And that's why I'm trying to help you guys understand a lot of these markets. So we do a stock talk every week. I try to do this. And if you're new to that, what we do is we created a portfolio in Yahoo Finance. I know this is a little off topic, but I want to explain to you guys how stocks work and how to analyze them. And last week we went and we created this, and we actually added this to our position. This is a steel ETF because I think the steel industry is going to be doing good, and you can check out that video. I'll try to link it right up through here, where I try to explain to you the economics, just economics 101. Then we go in supply, demand, how do you analyze stocks and bonds and things like that, and how you can get invested, in $5 a week or a paycheck. I'm not a financial advisor. I'm not trying to even sell you anything. I'm just helping you, explain to you a lot of the economics that people and the schools just don't teach you. So hopefully that's my spiel for today. But folks, right now, mortgage rates, they eased a little bit and they continue to ease. But if you want to go to my website, just go to therateupdate.com. We'd love to help you. Our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Who am I and what do I do? I'm actually a federally licensed loan officer. So I'm licensed in all 50 states as well as Puerto Rico. Our pride here is we're going to act as 34 banks for you, because what we are is we're a federal bank, but I'm also set up with 33 other lenders in the background. I can use their programs, their rates, everything. So you'd use me at therateupdate.com, and you can put in your application right over my head. You can hit the Apply Now button. You can schedule a consultation. You can give us a call. We also just put in a couple different videos through here, and these are going to be intriguing. I'm going to move these around, but this is a brand new section that we just added. Here's that rate watch thing I was talking about. If you're a homeowner right now and you want to track rates, where they're going, you want me to take the heavy lifting to say, okay, Dan, when rates hit 6.5, get the paperwork started. We'll put in your information right through here, and we don't sell the data. All that information is private. Then we've been adding videos in here like the Home Buying 101. If you're a disabled vet, please reach out to us. We'd love to help you to see if we can save you some money on that mortgage, because in that case, you probably don't have a refinancing fee from the VA, and that can save you 99% of the cost that you would incur if you're looking to refinance, and much, much more. Even we just posted a video the other day, understanding credit and credit scores, and the system that I personally use to help me increase my credit scores. So that's our website, folks. I hope you enjoy it. Thank you so much for watching. God bless. If you like what you found and you like the content and you learned something today, please do me one favor. Add to to be a subscriber of mine. It just helps me get noticed by more and more people out there that hopefully need some help, and I'm there to help them. Have a fantastic evening. See you here tomorrow to see how this mess starts another day. Thanks for watching, folks. See you then. Bye-bye.